Welcome to the Sykes & Company PA video blog.
Once we have provided the appropriate agreements for sale to the buyer and their buyer's advisors, depending on whether it's an asset sale agreement or whether it's a common stock sale agreement, obviously there'll be some time. There'll be between when you hear back from them, and probably they will request a list of due diligence items that will probably include last 4 years of tax returns, your QuickBooks files, the permanent file there, your income tax returns prepared, script dispensing logs, probably list of top payors, list of top 25 drugs dispensed, any qualified plan documents that you may have in place, details on any liabilities if common stock is being sold, the actual inventory, perhaps last actual inventory is taken. There's a lot of information that a buyer may be asking for or their advisors that you would be expected to provide to them. And again, from prior videos, we've talked about non-disclosure agreements, etc., that we'll have in place so that information can be freely shared with the buyer. Once the buyer's folks receive this information and take a look at it, most likely they will come back with a negotiated offer. Again, whether it's the asset sale part or whether it's the common stock sale part. And frankly, that's the point in time when you and your advisors will have to look hard at yourselves and into the mirror and say, what is it that I'm willing to give up or not give up or receive or not receive? And you have to decide whether you're going to be hard pressed on certain issues or not. Obviously, as you begin to reach that negotiated, agreed upon price and structure, then there'll be closing dates and times set up. In some cases, you may be financing the deal for them. In other cases, there may be a third-party pharmacy niche bank financing the transaction. Some cases, there may be banks that are financing the transaction that know nothing about pharmacy. And God bless you if that's the case, because that will be very problematic in trying to get to a closing. A pharmacy transaction is a cash flow animal, not a collateral-based situation. And cash flow is king in this situation, as you probably have listened to from earlier videos, and getting your books in order and maximizing your cash flow. So once those closings are set up, and as you work towards the ultimate closing of the transaction, you begin to prepare for your ultimate demise from the pharmacy. Again, if you're selling the common stock, it's essentially you transferring that piece of paper. They walking away with the federal ID number, the third-party contracts, MPI, NCPDP, everything that's in place, the entity, and you're out of that situation completely. If you're selling the assets and come to an agreement upon that, you're selling certain assets, then collecting typically your receivables, which are typically not sold, taking your cash, paying whatever debts there, and then liquidating the entity, and then you go about your merry way into retirement. So you have to then obviously very importantly decide what your next step is in your retirement process and begin planning for that long and hard, because the majority of the assets are probably the majority of the assets upon sale most likely will be received upon closing, and you'll have the tax implications on that hopefully you've planned well, and then the funds that you'll have post-tax will be set up and invested through your investment advisors for long-term planning and hopefully success. But that's the transactions that you'd be looking at in the sale of a pharmacy.